Hi everyone, Rowan Smith at the Mortgage Center. I want to answer one of the most common questions that we get. Will the bank absorb some of my penalty if I give them my business? The answer? Absolutely not. The bank has a legal right to that penalty. In exchange for granting you a fixed rate for whatever length of time they gave you, whether it was a 5-year or a 3-year or a 1-year, if you're attempting to break that term, they can't break the term on you and suddenly jack the rates if interest rates have gone up. They have to just absorb it. And on the same end of that, the opposite end of that pendulum rather, is the fact that you have to pay a penalty if you break the term. Now if you're with a bank, and I'm just grabbing hypotheticals here, if you're with Vancity and you've been with them for 3 years, there's 2 years left in your term. Maybe you got in when mortgage rates were 5.7%, something like that. At the time it was a great rate. Now looking back, doesn't look like such a great move. There was no way for you to have known that. Now that said, you made the best decision you could at the point in time. So you're now getting an offer from Scotiabank to go over there at 3.89 for a 5-year. Vancity is offering you 4.14, but they're giving you a big penalty, somewhere in the tune of $20,000, and you think this can't be right, this has to be wrong. It probably isn't. If rates have come down dramatically, your penalties are calculated based on the greater of 3 months interest or the interest rate differential at most institutions. The interest rate differential is kind of a complex formula, but it basically looks at how much time is left in your mortgage, what rate would the bank be charging on money for the remainder of your term today, and looking at therefore how much they're losing, and that's kind of what they're going to charge you for it. If rates have moved considerably, a percentage point or more, maybe not even quite that high in some cases, and depending on the length of time left in your term, your penalty could be the equivalent of 10 months of interest. It can be very, very high. So if you're going to quote $15,000 or $30,000, you may want to double check with them, but don't expect the next institution who's coming along to try to pick up that penalty. They just won't do it. In the 10 years I've been in banking and finance, I have never seen one institution pay another's penalty to bring the business over. I've never seen it. It has never happened. I have seen institutions, when you stay with them, reduce the penalty, but I can count the number of times on one hand, and I can count, and all of it has occurred with one financial institution. So, if you're thinking your penalty is exorbitant, it probably is, but we can still determine whether or not it is a fair penalty, and we can push back and make sure that their calculation that they're doing for the penalty is in line with what's in their standard mortgage terms. Now, what does that mean? You've got to get those standard mortgage terms. You were given them when you signed the mortgage at the notary or lawyer's office, if you're in BC. You're given a copy of them. They're usually a very thick booklet, and they could be 45 to 110 pages depending on your institution. In there is a very detailed breakdown of how to calculate the interest rate differential. Now, you're going to have to go to their website and pull up some of their rates, find out what rate they're using, and it's not going to be very simple. I can help you with that. So if you want to know if you're getting a fair shake with your penalties, what options you have, maybe I can get a bank to kick you some cash back as part of the deal to help offset some of those costs, give me a call. For the Mortgage Center, I'm Rowan Smith.